Welcome to Earnings Recap. Today we're covering Microsoft's fiscal year 2025 third quarter earnings conference call. If you enjoy this kind of content, please like the video and subscribe to the channel. Today we're doing a deep dive into their latest earnings call.
That's right.
Our mission really is to unpack this report in plain English for you. We'll pull out the key numbers, revenue, profit, growth, give you a clear sense of Microsoft's strategy, what they're focused on, and what they see coming next.
And we'll touch on some of those analyst questions, too, which often bring out interesting details.
Exactly. So the big picture first. It was, a landmark quarter for them, really strong performance.
Absolutely. And a huge part of that, as you'd expect, was Microsoft Cloud. It really fueled the results.
Okay, so let's get into the numbers. What were the headlines?
Well, revenue hit $70.1 billion. That's up 13% year over year.
13%, okay.
Yeah. And if you look at it in constant currency, so taking out the effect of exchange rate changes, it was actually up 15%. Pretty solid.
15% constant currency. Got it. And the cloud.
That's where it gets really impressive. Microsoft Cloud revenue surpassed $42 billion.
Wow, over $42 billion.
And the growth there was even stronger, up 20% as reported, or 22% in constant currency.
So the cloud business is growing faster than the company overall. Makes sense.
Definitely the main engine right now. And it wasn't just top-line revenue either. Gross margin dollars, they were up 11%.
Okay.
Operating income increased 16%, 19% in constant currency.
And the bottom line, earnings per share,
came in at $3.46. That's up 18%, or 19% constant currency.
And I think you mentioned these all beat expectations.
They did, yeah.
Yeah.
Across the board, these results were better than what analysts were forecasting. Always a good sign.
For sure. So let's dig into that Microsoft Cloud performance a bit more. It's clearly the driver.
Absolutely. They really emphasize how essential cloud and AI are becoming for businesses. Helping them boost output, cut costs, speed up growth. It's fundamental now.
And they're putting their money where their mouth is, right? Investing heavily in data centers.
Massively. They mentioned opening new data centers in 10 countries across 4 continents just this past quarter.
10 countries in one quarter. That's a lot of expansion.
It really is. And it's not just building the physical space. They're laser focused on optimizing the AI infrastructure within those centers.
How so? What kind of optimizations are we talking about?
Well, they're claiming some pretty remarkable progress.
Right.
Like doubling AI model performance roughly every 6 months.
Doubling every 6 months.
That's what they said. Plus, they've cut GPU lead times, getting those critical AI chips faster, increase the AI performance per unit of power, and get this, halved the cost per token.
Halved the cost per token. So making AI processing cheaper and more efficient.
Exactly. Those efficiency gains are a really big deal. It helps drive adoption.
And it seems like customers are responding. They mentioned specific companies moving more to Azure.
Yeah, they highlighted examples like Abercrombie & Fitch, Coca-Cola, ServiceNow, all accelerating their cloud migrations. It shows this isn't just hype. Businesses are actively moving workloads.
And it's not just new applications, right? They talked about mission-critical stuff, too.
Right. They specifically mentioned their strength in handling workloads involving VMware, SAP, and Oracle. That signals trust for really core business systems.
You're looking even further ahead. They touched on quantum computing, Majorana 1.
Yeah, a quick mention, but it shows they're investing in those, next-generation computing paradigms as well. Still early days, but important strategically.
Okay, so that's the cloud infrastructure and AI. What about data and analytics? That's tightly linked, I imagine.
Very tightly linked. They talk about deep integration between their AI platform and their data stack. Makes sense. AI needs data.
So what specific data services are seeing growth?
Well, PostgreSQL usage is accelerating. They said nearly 60% of the Fortune 500 are using it now. Mentioned BMW, BNY Mellon as examples.
Okay.
Cosmos DB, their global database service, also saw revenue growth accelerate. Companies like CarMax, DocuSign, NTT Data, even OpenAI use it.
So strong demand for their database offerings and analytics.
Analytics consumption accelerated too. And Microsoft Fabric, their unified analytics platform, is really taking off.
Fabric, right. What were the numbers there?
Over 21,000 paid customers. That's up 80% year over year.
80% growth. That's huge. What makes Fabric appealing, do you think?
It's that integration, I think. It brings together data warehousing, data science, real-time intelligence, Power BI, all in one place. They said real-time intelligence is the fastest growing part of Fabric.
So simplifying the data landscape for businesses.
Pretty much. And they mentioned significant data growth in One Lake, which is Fabric's underlying data lake.
Okay, let's pivot to the AI platform itself. Foundry, they call it.
Yes, Foundry. This is where businesses build, customize, and manage their AI apps and agents. Usage is booming.
How many are using it?
Over 70,000 enterprises and digital natives. They gave examples like Epic, Fujitsu, H&R Block, LG Electronics.
70,000. And the scale of processing.
Mind-boggling, really. Over 100 trillion tokens processed just this quarter.
100 trillion.
Yep, up 5x compared to last year. And their new agent service, which helps build these AI agents, already has over 10,000 organizations using it.
Wow. So the tools are getting traction fast. Are they adding new models too?
Constantly. They mentioned new fine-tuning tools and adding the latest models from partners like OpenAI, Cohere, Meta, Mistral, Stability AI, DeepSeek, all available within Foundry.
Giving developers lots of choice. And what about Microsoft's own models, the Phi series?
Also growing fast. 38 million downloads for the Phi family of smaller language models. They also highlighted progress with BitNet B1.58.
What's special about BitNet?
Its efficiency. It can run effectively even on standard CPUs, not just the specialized, more expensive GPUs. That broadens accessibility.
Makes AI potentially cheaper and easier to deploy. Interesting. Okay, let's talk developer tools. GitHub Copilot is obviously a big one.
Huge. And it's evolving. They talked about the new agent mode in VS Code.
Agent mode, what does that do?
It's more proactive. It can help iterate on code, spot errors, even suggest automatic fixes. They mentioned an auto-fix feature and a code review agent.
So moving beyond just code suggestions to more active assistant.
Exactly. They framed it as moving from an AI pair programmer to more of a peer programmer. And they're even previewing a SWE agent, software engineering agent, for handling longer, more complex tasks asynchronously.
The future of coding, maybe? What are the adoption numbers like for Copilot?
Really impressive. Over 15 million users now. That's up more than 4 times year over year.
15 million developers using it. Wow.
Yeah. And they mentioned big names using it too. Twilio, Cisco, HPE, Skyscanner, Target.
And their core tools, Visual Studio and VS Code.
Still foundational. Over 50 million monthly active users combined.
Huge user base.
Yeah.
And the Power Platform for low-code development.
Also growing strongly. 56 million monthly active users, up 27%. And they're increasingly embedding AI features there too.
Democratizing AI development for non-coders.
That seems to be the goal, yeah.
All right, shifting gears to the future of work. Microsoft 365 Copilot. How's that adoption going?
Gaining serious momentum. Hundreds of thousands of customers now using it. That's triple the number from last year.
Triple, okay.
And they're seeing larger deal sizes and more repeat customers. That suggests businesses are finding real value.
What's new with M365 Copilot?
They highlighted a major update that brings together agents, notebooks, search, and creation tools. And they introduced new deep reasoning agents like a researcher and an analyst agent.
So getting smarter and more integrated into workflows.
Seems like it. Plus, they're building out agents for specific roles like sales and customer service, and also for business processes.
And people can build their own agents too, right? With Copilot Studio.
Yeah, and that's exploding. Over 230,000 organizations are using Copilot Studio now.
230,000.
Including big companies.
Oh yeah, 90% of the Fortune 500 are using it, they said. Over 1 million custom agents were created just this past quarter. That's up 130% from the quarter before.
Incredible growth. Shows a real appetite for custom AI solutions.
Definitely. The ease of creation is a big factor there. Okay, what about their more traditional business applications? Dynamics 365.
They reported gaining market share there. Mentioned customers like Avaya and Brunswick switching over. Verizon is using Dynamics 365 sales now.
So still competing effectively in the CRM/RP space. And specific industry solutions.
They highlighted healthcare again with Dragon Copilot. Said it helped document nearly 9.5 million patient encounters.
9.5 million encounters. That's tangible impact.
Absolutely. City of Hope, Ottawa Hospital, Tufts Medicine, Wellstar were mentioned as users. They also talked about new agents for factory operations and safety in manufacturing and for personalization in retail, like with Bath & Body Works.
Tailoring AI for different industries. Makes sense. Let's talk Windows and devices. AI is big there too now, with Copilot plus PCs.
Yeah, the new Copilot plus PCs promise better speed and battery life, specifically optimized for AI tasks. And they're seeing more AI apps from partners like Adobe, Canva, Zoom coming to the platform.
And Microsoft is adding its own AI features to Windows.
Right. They rolled out exclusive experiences like Recall, which helps you find things you've seen on your PC and click to do, plus enhanced Windows search, to all these new Copilot plus PCs.
Weaving AI right into the operating system. What about Windows 11 adoption in businesses?
Picking up pace. Deployments are up nearly 75% year over year. The looming Windows 10 end-of-support deadline is likely helping drive that.
Good point. Security is always critical. What did they say there?
Top priority as always. They mentioned progress on their Secure Future initiative. And, tying into the AI theme, they introduced security copilot agents.
AI agents for security tasks?
Yeah, designed to handle certain tasks autonomously, leveraging Microsoft's threat intelligence. They also added new capabilities in Defender, Entra, and Purview specifically for securing AI deployments.
Protecting the AI itself, important. How's the security customer base growing?
1.4 million security customers now. And the number using 4 or more of their security products is up 21% year over year. Companies like EY Global, Manpower Group, TriNet.
So customers are adopting more of their security suite. And Entra for identity.
Huge scale there. Over 900 million monthly active users for identity services.
Okay, let's switch over to the consumer side. LinkedIn, still growing.
Still growing strong. Crossed the 1 billion professional members mark.
1 billion. Wow.
Yeah, double-digit membership growth.
Yeah.
Engagement is up too. More time watching videos, more comments, and more members are using the AI tools for skills in job seeking.
AI coaching too.
Significant growth in usage there. They remain the market leader in hiring tools, mentioning customers like Equinix and Verizon, and good growth in LinkedIn Premium for small businesses and also in their marketing solutions revenue.
Seems like LinkedIn is firing on all cylinders. What about their general advertising business? Search.
They're really transforming search with Copilot integration in Bing. More AI-curated results, conversational search.
Integrating AI into Edge and MSN too.
Yes, Copilot Vision in Edge, Copilot Discover for personalized MSN content, and an updated Copilot mobile app. All this helped them gain share in both Bing Search and the Edge browser.
And the overall ad revenue.
Pretty significant now. Over the past 12 months, total advertising revenue surpassed $20 billion.
$20 billion from ads. Okay. Let's talk gaming. What's the focus there?
Margin expansion is a key focus. And reaching more players, they want to bring their games to over 500 million monthly active users eventually.
Ambitious goal. How are they doing as a publisher?
Very well, actually. They were the top publisher by pre-orders and pre-installs on both Xbox and PlayStation this period.
On PlayStation too. That's interesting.
Yeah. And PC Game Pass revenue is up over 45% year over year. Cloud gaming expanded to LG TVs, hitting record hours played. And they have over 1,000 games now, part of Xbox Play, anywhere, usable on console and PC.
Bringing AI to gaming, too.
Yep. Copilot for gaming is being integrated across Xbox. And they highlighted the success of the Minecraft movie.
Right. The movie did well. Did it impact the game?
Apparently so. Led to a significant increase in weekly active users for the Minecraft game itself. Nice synergy there.
Okay, back to the financials for a moment. Commercial bookings, how did those look?
Very strong. Up 18% or 17% constant currency. That was significantly ahead of what they expected.
What drove that outperformance?
A big Azure commitment from OpenAI was a major factor, but also just consistent performance in their core annuity sales contracts.
And the remaining performance obligation, the RPO?
Also grew significantly. It's now at $315 billion. That's up 34%.
$315 billion in contracted future revenue? That's massive.
It is. And roughly 40% of that is expected to be recognized as revenue in the next 12 months. So strong visibility.
What about capital expenditures? How much did they spend on building out all this infrastructure?
$21.4 billion in the quarter. That was actually a bit lower than they expected, mainly due to timing of payments.
Still a huge number, mostly for cloud and AI.
Primarily, yes. Investments in long-lived assets like the data centers themselves and also the servers, especially for AI.
Okay, let's look ahead. What's their outlook for Q4, the current quarter?
It said demand signals look consistent through April. They expect foreign exchange to actually help revenue growth slightly by about 1 point.
Okay, and bookings?
Expect solid growth, though likely moderating a bit after the huge Q3.
What about cloud margins? You mentioned the AI investment.
Right. They expect the Microsoft Cloud gross margin percentage to be around 67%. That's down a bit year over year, mainly because of the costs of scaling all that AI infrastructure.
Makes sense. And capital spending in Q4?
Expected to increase sequentially from Q3. But their overall guidance for spending in the second half of the fiscal year remains unchanged.
Did they give specific guidance for the different business segments?
They did. For productivity and business processes, think Office. Dynamics, they expect healthy growth. For Intelligent Cloud Azure's Home, also strong growth projected.
What was the Azure growth forecast specifically?
34% to 35% constant currency growth for Azure. though they did add a caveat about potential AI capacity constraints beyond June.
Capacity constraints, so demand might be outstripping supply.
Potentially, yes. It highlights just how fast demand for AI services is growing. They're racing to build capacity.
What about more personal computing, Windows, devices, Xbox, search?
It's kind of a mixed bag there. They expect declines in Windows OEM revenue sales to PC makers and also in their own devices revenue.
Okay.
But they expect strong growth in search and news advertising, excluding traffic acquisition costs, and also strong growth in Xbox content and services.
So software and services offsetting hardware declines. Got it. Did they guide on overall company margins?
Yeah, they gave guidance ranges for cost of goods sold, operating expenses, other income, and the tax rate for Q4. And importantly, they expect overall operating margins for the full fiscal year 2025 to be up slightly compared to FY24.
Margins holding up despite the heavy investment. That's positive. Any comment on FY26 capital spending further out?
Just that they expect CapEx to grow again in FY26, but at a lower rate than the big jump in FY25. And the mix might shift more towards shorter-lived assets, like servers, rather than the long-lived data center buildings.
Interesting. Okay, let's touch on the analyst Q&A. That often provides extra color. Data center strategy came up, right?
It did. Analysts asked about their build versus lease decisions. Microsoft basically said adjustments are normal, driven by forecasting future demand, the size, shape, and location of workloads.
And they emphasized the long lead times.
Yeah, 5 to 7 years from buying land to having a data center operational. It requires long-term planning. They also stressed ongoing optimization work, hardware, software, model architecture to improve efficiency, and acknowledged potential power availability challenges in some places.
Makes sense. What about cloud migration demand? Why is it accelerating?
They pointed to efficiency gains as a key driver, customers wanting to save money or do more with less. Also growth in data volumes and cloud-native apps. They stressed the link between AI workloads driving demand for core cloud services too. Infrastructure is still a foundation.
Was there discussion about recession resilience, how they'd handle an economic downturn?
Yeah, the focus was on helping customers become more efficient via the cloud, using the malleability of software, as they put it, to adapt. The goal is to gain share even if the overall market slows down.
Positioning themselves as a cost saver in tough times.
Smart. There was a question clarifying Azure growth from AI versus non-AI.
Right. An important point. They clarified that the Q3 Azure outperformance beating expectations was mostly from the non-AI side of the business.
Okay.
The AI upside they saw was mainly because they brought planned AI capacity online earlier than expected, allowing them to meet more demand sooner. But the core cloud business drove the beat.
Good clarification. What about capital efficiency, getting the most out of those billions in spending?
They talked about the historical cycle. CapEx accelerates, then software and hardware efficiencies kick in to improve returns. They feel this is happening very quickly on the AI side.
Faster than previous tech shifts.
Seems so. Compounded by having diverse AI models and focusing on model efficiency. They actually said margins on AI services are better at this stage than margins were during similar phases of past transitions. Software is key to making hyperscale work efficiently.
Interesting. The DeepSeek moment came up too. What was that about? Software efficiencies. Exactly. It relates to how much improvement you can get from software optimization. Things like better model architecture, more efficient use of data and compute. They suggested these software gains are driving huge performance improvements, potentially even outpacing hardware gains from Moore's Law.
So software can make the hardware far more productive.
Right. And that influences how they build their infrastructure, needing a balanced fleet. Efficiency drives demand, was their point. They also said they aren't planning to change the depreciable life of their assets right now, focusing instead on maximizing useful life through software.
Makes sense. Finally, what did they say drove the better-than-expected growth in the non-AI parts of Azure?
It was pretty broad-based. Good performance across different customer segments, especially large enterprises. Some improvement in their scaled sales motions. Consistent results geographically, and just good execution on helping customers with migrations and adopting data workloads like Fabric.
So solid execution across the board on the core cloud business.
That's the picture they painted, yes.
Okay, so wrapping this up. A really strong quarter for Microsoft, clearly powered by cloud and increasingly AI momentum.
Absolutely. Huge investments going into infrastructure and innovation across the board.
And the outlook seems positive, even with potential AI capacity bumps, focusing on efficiency to meet that booming demand.
Yeah, the integration of AI across everything they do is the dominant theme. It's not just one product, it's becoming woven into the fabric of Microsoft.
Which leads us to a final thought for you listening. Think about these massive efficiency gains happening in AI and cloud. How might that fundamentally change how businesses operate? Maybe even accelerate technological progress itself in the next few years.
Right. What new possibilities open up when both the software and the hardware are improving so rapidly, kind of compounding each other? It's definitely something to watch.
A fascinating landscape indeed. Thanks for tuning in for this deep dive into Microsoft's earnings call.